All right, Nick. Thanks for making it today. Seems a bit weird me interviewing you. Hope you're all right with that.
Yeah, I'm okay. I mean, I've interviewed you before, so it makes sense to turn around the other way.
Sounds good. Sounds good. Well, our idea today is basically talk about your experiences around the first ETC in Europe. So I want to go into a little bit on that. Just establish the history of it. Some of the anecdotes, some of the story. Just really go over that, and then we've got a record for history from now on, and you can go into the sunset. Looking at your legacy, right?
Yeah, when I pass away, the recording will be there for the history.
I thought you were ever going to be forever young, Nick. I thought that was always the target. Yeah.
Trying.
So for people who don't know you, do you want to introduce yourself and talk about your time in the ETF industry?
Yeah, I'm Nik Bienkowski, co-founder of HANetf. Been in the ETF industry for about 23 years. Initially started off in finance, worked in pensions, then mining M&A. Then met Graham Tuckle in Australia, and he talked about the world's first gold ETF and thought that sounds interesting and also an obvious idea. So that's how it all really started. 4 or 5 ETF companies later, still here today with you.
5? Which one's the 5th one then? Are we in for another one after this one?
I guess Bullion Securities converted to ETF securities. Boost went into Wisdom
I suppose there was a few there, wasn't there?
Yeah. As I said, 4 to 5, depends how you count them.
Yeah. And we'll be talking a little bit about
plus.
CISO. Yeah, no, I'd forgotten about that.
Yeah, just another subsidiary.
ETP management.
Yeah, so there you go.
There's been a lot, hasn't there? You were one of the main people behind the first ETC in Europe.
Yeah.
What was the product? What was the product that you worked on?
Well, it was basically an exchange tradable security backed by physical gold. And that's really as simple and basic as it was. Gold was held in a vault. As a result, the security tracked the price of gold. They were issued in matching units versus the gold that was in the vault that came either in or out, depending on supply and demand. And then people now had an easily tradable security that just tracked the price of gold.
And it's got the name exchange traded commodity. How did that come around?
I guess a few years before the gold ETF or gold ETC in Europe started, the ETF industry was born. It's brand new wrapper or product structure. The F means fund, exchange traded fund. In some countries, funds must be diversified or meet certain rules. So some countries, this product would be an gold ETF, and in Europe, it's called a gold ETC. And we tried to make it look like an ETF, but it didn't have F in it because it wasn't a fund. So hence gold, exchange traded commodity, was born.
And that was the first ETC in Europe, right?
Correct, yeah.
And the first gold product in Europe.
Yeah, first gold ETC, exchange tradable gold product in Europe.
And that was like 6 months before the world famous GLD, right?
Yeah, I think the GLD was launched around November 2004, and the gold ETC started in December 2003. So different regulatory process, but yeah.
Pretty amazing, eh?
Yeah.
And the gold price then?
Well, I can tell you, but even before I started, I was working in gold mining, and every gold company I spoke to were just they were just trying to survive. Touched $250, $270 an ounce, but it was about $400 an ounce when we launched the gold ETC. Today it's around 4,000, even got to 4,500 a few weeks ago. So 1,000% or 900% increase in that time.
It's pretty amazing, isn't it? That the gold price has gone up tenfold since, and you got to feel that gold ETFs are the reason for that, right? Because ultimately nobody was investing in gold apart from gold bars and gold coins, were they? I mean, it's this concept of having 3 to 7% in your portfolio just didn't exist, did it?
Yeah, I mean, it's probably a few reasons, but obviously just made it simple to buy gold, increased either demand or created a new source of demand to be part of the reason why, for sure.
Does that ETC still exist today? What's it called?
There was 2, the one in Australia and one in Europe, Gold Bullion Securities, still called Gold Bullion Securities, GBS. It's now owned by WisdomTree. They bought ETF Securities about 8 years ago.
So the ticker's GBS there?
Correct, yeah.
Okay.
GBS for Gold Bullion Securities.
Do you know what the AUM is today?
I think it's a few million, but it's part of a range of gold ETCs. So.
I know it's 4.3 billion. I looked at it today, which I think is still pretty amazing, right? I mean, it still seems to be the same TER that it was back in the day, and it's still got 4.3 billion of assets. I think that goes to show, actually, when you're early in the ETF market, assets are pretty sticky, aren't they?
Yep.
It's pretty amazing.
Well, and it's backed by gold, so it can last forever.
Exactly. That's what we always tell everybody, isn't it? The gold exists. You mentioned gold mining as well, and I think that was actually one of the ways that people accessed gold back in the day was, pretty buying, gold mining companies. But that can be pretty speculative, can't it?
Yeah, I mean, I guess the mindset for some investors that they're used to investing in companies. Companies produce things that have a utility, or they produce dividends. How do you value a company? Perhaps the discounted value of its cash flows. When gold came about, it was they sort of really hadn't thought about that before, and the price had been falling for about 20 years. I remember having conversations with investors saying it's negatively correlated to equities. Yeah, but it needs a positive expected return. What's the expected return? So they didn't have a concept of the return being more than zero at the time. So that was one challenge, I guess, with their sort of mindset.
I remember seeing your efficient frontiers that you send me out there with Nick, the Sharpe ratio and the extra performance in the portfolios. Feels a bit like the crypto market today, actually, how people are talking about that as well, doesn't it? The whole setup and the whole persuasion to investors to include in their portfolios, right?
Yeah, I mean, I guess portfolio diversification is an easy concept and an accepted concept to understand. So it made sense to align with that to make it understandable and seem real.
Now, you mentioned Graham Tuckwell earlier, who's a gentleman very close to both of our hearts, and obviously has, done terrifically well in the ETF industry. I think it added a lot, in terms of the history and the progression and, the whole ethos, around the entrepreneurialism in this space. But it'd be great to hear some of the background and history behind how did the idea come along. I seem to remember some story around a stapled interesting wine or something like that, which was the genesis of the idea. But yeah, give us an idea how Graham and you came up with the idea on how to create this gold ETC.
I guess people probably have different stories about how it came to be born. Other people across the world in different markets probably had a similar idea, but in terms of Australia, where the very first one was created, Graham was part of the Australian Gold Council and had a mining M&A background as well. And they, as part of the board, they were trying to find ways to make gold more accessible. It was hard to purchase. Buying physical gold or a gold certificate. They wanted to create a simple security that had the track the gold price and had the safe and secure attributes of gold bullion. So they decided that could be what was ended up being the gold ETF. And there'd been some wine securities in Australia that tried to securitize and list on an exchange baskets of wine, which was a liquid investment. But wine's not homogenous.
Yeah.
Gold's homogenous, 99.5 gold for LB May gold, etc. Gold's gold, whereas wine's slightly different. So the gold succeeded, whereas the wine, I don't think did quite succeed.
So you're saying gold is more liquid than wine then? Yeah? Depends on whether it's on a Saturday night or not, right?
Depends whether it's in your portfolio or in your wine cabinet. That was that part of the story. At the same time, the World Gold Council had engaged some people to look at something similar, as their members wanted to create another source of demand, as central banks were selling gold at the time, a way to benchmark gold mining companies, the gold price, for example, etc. So they tasked the World Gold Council with also creating something similar. Then slightly off the beaten track, but there's a bunch of guys, gold bugs, some of them in the US, in 2003, 2002. They all thought the world was going to come to an end. All the banks were leveraging. There was all these derivatives. There was no reporting. And they thought gold was obviously a safe haven. And when everything blows up, what's left is gold and not fiat money. And lo and behold, 4 or 5 years later, we had the financial crisis and some of the banks blowing up through leverage and bad hedges and bad management. So it was a sort of a range of people with similar ideas that sort of resulted in it becoming so widely held and so popular.
So why did you guys succeed and they didn't? Or do you get there before them, basically? Because I think some of those guys followed on with GLD or whatever, but why do you think you guys succeeded?
We got there first in Australia, and then we engaged and then entered into a JV with the World Gold Council. So our business did the rest of the world ex-US, while the World Gold Council launched the product in the US with State Street, the Perth Mint, and a few others. ABSA in South Africa also created similar products not long after. But the real gold bugs, they ended up creating products that held gold and perhaps securitized the gold in a different way. They thought maybe the gold wasn't didn't exist in the vault behind the gold
Yeah, we've had
ETFs,
all had that
etc.
conversation with people, haven't we? Yeah.
But I guess anyone that owns gold and then issues a security, you could argue that about anyone. Is the gold actually
Yeah.
there? We obviously have gold audits there a couple of times a year, and all the gold bars are listed, etc. So, and people, 20, 25-year history of those products now, people trust that they work and that the gold is there.
And those standards you guys set with the twice yearly audits, the bar lists, you know, all the numbers on the good delivery bars where you could reference them. I mean, that was setting the standards back then. You know, there was nothing like that in product development. What on the product itself and the journey? I mean, obviously, there must have been a lot of challenges with that.
Yeah.
You know, I mean, I think you work pretty closely with the FSA which is the FCA today, and the JFSA in Jersey. You know, what was some of the recollections of that? You know, persuading those guys to go along with this, because I suppose you were trying to, because UCITS didn't allow single exposures. You know, and everybody always used to say, "I want a UCITS," where you say you can't have one, so you had to come up with a product that looks and feels pretty similar. You know, how do you go about that, persuading regulators and exchanges and all those guys that this was a viable structure?
I guess creating something new every time is always difficult, especially something that might be hard for people to grasp. You know, and perhaps gold as
But this was new. You know, this
yeah.
wasn't a new instrument within an existing wrapper. This was a brand new wrapper, right? This was the first time an ETC or an ETP like this was created in Europe, right? So you must have been, you know, really walking in that virgin snow, really, and figuring things out. It must have been a real challenge to get people on side.
Yeah, I mean, it's complex. Some people also don't have grasp of the complexities, even though it's so simple. What's behind it is complex initially. Having your brain think in a way that you've never thought before is just hard in itself. But I mean, if you think in the background to the launch of the product, I mean, even in France until the mid 2000s, gold was banned as an investment, and gold used to be banned in other countries. Investors were banned from holding physical gold, especially when gold was part of the gold reserves. You weren't allowed to hold gold. And then UCITS were specifically...
Yeah, which president was it that Nixon in 73 allowed, because it was Roosevelt who banned retail ownership, wasn't it, of gold? I think Nixon approved it again in 73, wasn't it? So it was literally, as you say, banned from retail's hands, wasn't it?
It definitely wasn't Trump.
Yeah. No, he definitely wouldn't have been doing that.
Yeah. But anyway, it was.
He might have done it for his toilets, but not for his gold ETFs. Yeah.
So the fact that it was banned as an investment in many countries made it also difficult in its own right. So having to pass all those barriers and get people to think in a different way and accept something that was complex initially was challenging.
What was the FSA's response when you went to them and said, "Look, we want to do this"?
I mean, I think, obviously it's better to try and approach a regulator early on if you can do something new, so they expect what you're going to present to them in a filing, and better, and also they might mention something you hadn't even thought of that might be an avenue to the road to success, or maybe stop the project in its tracks, and you can save time and money. But they were open to the idea, and I mean, they obviously ended up approving the gold ETC in Europe, so they sort of led the way in that.
Yeah, I'll never forget the UCITS eligibility letter we got from the FSA at the time. I think it was like 22 pages long to explain why the product could be bought by UCITS funds and similar types of investment vehicles. And even then, I think we had to pick off all the regulators individually, didn't we? CSSF and BaFin and all those types of things. You know, it was a real slog, wasn't it, getting those guys to do it? And I think you're quite right. I mean, certainly, when I used to go out to talk to investors about the product, the amount of times people used to say to me, "Well, commodities isn't even an asset class. You shouldn't even be investing. It's like money, and all those types of things." But we believed in the democracy of it, didn't we?
Yeah.
And I think I always used to call it the People's Central Bank Bullion Securities, because it was the first time people could amalgamate and get together and have the same impact that a central bank would have in terms of protecting their money. And it was Wild West those days, wasn't it? Really, if we're honest.
Yeah. If you mentioned the gold, they say the UCITS rules. I mean, the UCITS rules are harmonised now, but back then they weren't even harmonised. The individual regulators could impose their own sub-rules to prevent products from coming to the market. They had to approve the marketing materials, or you had to do X, Y, Z, etc. So they could effectively block what someone else might approve, and that was harmonised. I think it was at UCITS 3 or UCITS 4 around the mid-2000s. So that made it a little bit easier, because they couldn't then prevent something that was meant to be accepted across Europe.
And did when you got out there, did people know what ETFs? Did people even know what ETFs were? Never mind ETCs.
Barely. I mean, when I met Graham in 2002, I didn't necessarily know what an ETF was, but when he explained to me, it seemed so simple.
You must have been about 16 then, were you, Nick? In those days, yeah.
Yeah, that'd be about right. And a few people that did know ETFs, I mean, it was hard to trade them. You know, it took quite a while even for investment platforms to make sometimes technological advancement or improvements to offer those products on their platforms, etc. So, I mean, today's 20, 25 years on.
It's taken for granted now, isn't it?
Yeah, it's taken for granted. But in those days, so we don't do those types of products. We don't do commodities. We don't do ETFs. We don't do ETCs. We don't allow gold. Oh, sorry, we're a fund platform. You can't buy a listed security. And it's like, but it's a fund, but we don't do listed securities, etc. And so it was until the demand sort of grew, it didn't make the economic sense for a lot of those providers and platforms to make the changes.
To get in a copy, you mean?
I mean, and our company wasn't even heard of back then.
Well, speaking of that, I mean, you know, obviously you're a 2-man band, and when I joined, I think it became three people. But you obviously engaged, you know, an established ETF firm, Lixor, to help you market it. How did that work, and what was the initial interest in the product? You know, what sort of AUM did you get in the first sort of 6-12 months from that? Because it wasn't too bad, was it? It was a pretty decent slug of money, right?
I think the GBS in London grew pretty rapidly to about 400 million. And then
which you'd be happy with today.
Yeah,
Never mind 20 odd years ago when the market was like a 20th of the size.
Even 100 million, it's generally considered a success in ETF. So not a raging success at 100 million, but you've reached where it's definitely break even. But then it sort of grew more slowly to about 800 million. Probably the pent up demand, or the people who actually wanted gold and understood it straight away were the first investors. And then we had a partnership with Lixor as one of Europe's largest ETF providers.
Lixor, which part of Amundi now, right? But it was probably the leading French ETF firm, wasn't it?
Yeah, but I mean, Graham and myself, etc. Before you joined, we were product developers and structurers, not necessarily European distributors on our own. So we partnered with Lixor, and we went along and used our spare time to develop oil ETCs and commodity ETCs.
Isabelle Bouchier, right?
Yeah, Isabelle Bouchier. I think she's now the CEO of HSBC Asset Management.
Yeah. She's another legend of the industry, right?
She's a lovely lady, and wish her all the best. But she's been around since probably before. Well, I was involved with the European ETF industry.
Pretty amazing. And then you decided to take it in house later on. I mean, what was the rationale behind that?
I guess later on, ETF Securities, the name was born. It was more than a one product company. It's very hard to hire lots of staff and spend lots of money around a single product. Stationery stores don't just sell a blue pen. So we launched some more products and hired some more staff, and we became an ETF or ETC company at the time, whereas before it was the guys that created a gold ETC that people still barely knew what that was at the time.
And it was actually a joint venture with the World Gold Council as well, wasn't it? You know, throughout that whole period. Yeah, similar to GLD, but you know, instead of, I think State Street's just a marketing agreement. They don't have any ownership in it. But I think, ETF Securities actually had an ownership alongside the World Gold Council, didn't it?
Correct, yeah.
Yeah, and how did that work with the World Gold Council then? How was it?
Fine, I mean,
who's a gent's name there? Jim
Burton.
Jim Burton. He was a bit of a character, wasn't he?
Well, had been the COO or CEO of CalPERS, one of the US's largest retirement funds. So he was brought over to the World Gold Council because they were trying to target gold as a strategic long-term holding that even pension funds should own. And then they also hired a guy called Simon Village, who had been a gold research analyst from South Africa, and a guy called Stuart Thomas, who had been an ETF trader in the US. So they brought those guys in to focus on the US, been working on a product in Australia, and we joined forces to do Europe.
Yeah, all big names still in the industry to a certain extent, some of those guys, right? So
still, all entrepreneurs are still involved in the ETF industry.
Yeah. I mean, I suppose that's one of the major differences that ETF Securities had as well, was it, the market in Europe has been heavily dominated by banks and asset managers. There's very few entrepreneurs, unlike the US, and I suppose that must have always been a bit of an obstacle when you were getting out there trying to talk to investors, but where do you think the competitive advantages were with ETF Securities in that scenario?
Just being first to market and being entrepreneurial, having someone says no, you just go, well, that means the answer could be yes somewhere. How do I find the yes answer? So I guess that's what entrepreneurs and founders are made of. Makes you probably realize there's a bigger opportunity there when you get lots of no's. And I guess the rising gold price helped too, because you can have a great idea, and if you're in a market where there's no demand for your product, or the price is falling for 5 years, then do you keep going on forever until where does the buck stop? So, and we sort of, I guess we launched it at the dip at the bottom. I mean, it's not like we expected it to be the
It's
bottom.
often a good place to be, though, isn't it?
Yeah, I mean, sometimes hard work, a bit of luck, etc., and everything's required to make a successful company.
I think as well, the team that we put together was pretty spectacular as well, wasn't it? I mean, there was some very guys who came in, quite raw, quite green, but have ended up being, real big names in the industry now. People like Will Rind, Stefan Garcia, Massimo Ciano. These guys, kicking around, who were just basically kids when we brought them into the game, but are now smashing it, aren't they?
Yeah. Benoit Ortier, Lucy Reynolds, Mandy Chu.
Yeah.
Loads of people, and they all willingly joined. The amount of interviews I had, and people went, "I'm joining a bank. You guys are probably not going to succeed, or I don't understand what you're doing, etc." And then a couple of years later, the banks were blowing up, and gold price was flying. So it's funny how things sometimes turn around, but you got to be willing to take that risk.
Yeah, no, and I think the biggest example of that is, I don't want to name the names, but somebody who ended up being the head of a very big Swiss ETF firm. He was our first potential hire in sales. Didn't come to us because he wanted to go to a bank, and then we've got I think one of the current big German ETF firms in the top three in Europe. He didn't come to us because he wanted to go to a bank as well. But that's the sort of people we're talking to. To try and bring into the game. How would you think the establishment, the ETC wrapper and Gold Bullion Securities, the sort of legacy of it? How do you think that's impacted the market in terms of that ETC wrapper? How it's permeated, how it's grown. How do you think that's developed? And did you ever think that would be the case?
No one could think 20 years ahead and think it was going to be so successful. But I mean, I
thought you always thought 20 years ahead, Nick.
Yeah. Well, what am I doing here then?
Exactly.
No, I mean, obviously, all the barriers were broken down, and it paved the way for other products to copy the structure. And now you can securitize anything that's deemed to be sort of liquid and obvious. And most things have ended up in either the ETF or the ETC wrapper. And I mean, look at Bitcoin. Wasn't even thought of when the gold ETC existed, right?
So you're telling Satoshi wasn't running around with his spreadsheet with a password protector on it at that point, no?
No, but yeah, I mean, it's obviously born a whole, just the ability and the vision to securitize anything that people would think should be in or would be a good investment or in someone's portfolio.
I think by number, I think you're exactly right. I think by number, the ETC wrapper is about 2/5 of all the products in Europe now. It's not by AUM, but by number of products itself. And I think you can see that across, whether it's commodities, currencies, crypto, leverage. I think anything that's, I call it the funky stuff that sits outside of UCITS. And I think the standards, as I say, you guys set with the bar list, the audits, but even things like, making it bankruptcy remote with a SPV structure, with a trustee structure around it, which is in stark contrast, I suppose, to the ETNs in the US that are issued a bank balance sheet, unsecured. So I think you built the legacy of it for me is you built a very robust alternative to UCITS, to be able to bring that into play. Where do you think that's going from now? What do you think's coming down the road next?
The things that are coming down the road next are the things.
Or can't you say, is that part of your product development now? Is it?
Yeah. The things that are coming down next are probably the things that are obvious, things that we know exist that haven't been securitized. There's what's coming next that we don't know. And we didn't know about Bitcoin 20 years ago, so it's probably some things that are going to exist in 5 or 10 years' time that we haven't thought of today. Probably going to end up in the ETF or ETC wrapper. And who knows, maybe a liquid securities, maybe not necessarily the actual liquid assets, but with all this machine learning and AI and all sorts of things, maybe something that can use liquid securities to copy the return of an illiquid security, perhaps. Then
private capital and that sort of thing, yeah.
Halifax Real Estate Index or what have you.
I think that's a lot more likely in the ETC wrapper than it is in the ETF wrapper, personally. I think that, and you may even see close-ended ETCs as well coming down the road, I think. I mean, we've always had the calls in the past around stamps or diamonds or wine. Go back to the old wine or art story, you know, and that could be that sort of quasi tokenization type approach. Yeah, diamonds are forever. But we must have had more calls and diamonds than anything else in our history, right?
Yeah.
Yeah, not just from our wives, but from people who want product development as well. So what misconceptions did you get early on the ETF and ETC market when you were running around? I mean, what's the sort of the push you've always had to make when you've been out there?
Gold's dead. That was one of them. FT published an article in, I think, 99 or 98, the death of gold. Always in hindsight, when you see articles like that published in titles on the front cover, probably means it's actually the bottom, the time to invest. But you need to have the guts to go against the grain. But I mean, even my mum, who had a sort of old school financial advisor in Australia, she always told me that ETFs didn't pay dividends and were risky. And she would buy stocks and funds, but ETFs are funds and they own stocks. And all ETFs did was replicate what they owned. And if they owned stocks, then they were as risky as the stocks they owned. And if the stocks paid dividends, then unless the ETF was accumulating, if it was paid out the dividends, then obviously they paid dividends. But her advisor was telling her that wasn't true, and she's not going to know that the advisor has some misconceptions. So I guess just things like that that don't make any sense at all. But you're having to tell people that effectively they're wrong, and people don't want to know they're wrong. They don't want to.
You don't need everyone to agree with you, do you? You just need enough people to agree with you, and then you're there.
Well, my mum finally owns a few ETFs now, so.
Well, I think everybody owns a few ETFs now, even if they don't know it, but they do. Actually, just touching on that, who was the first investor in the gold product in Australia? Because I think it's quite interesting that
can't remember. I think it was a gold fund in the US, maybe.
Wasn't it Evie Hamro and from BlackRock Today? I thought he was one of the ones that sent the first fax through for an order for GOLD.
Might have been, actually. I mean, yeah, you just mentioned that. I mean, we even took our subscriptions and redemptions were done via fax machine in those days.
Yeah.
Now it's all done via an ETF portal.
One of the challenges you had was you had to close down the original Go Bullion Securities, one that was done in November, and then reissue in March. And I think that was down to something that Goldman Sachs spotted or whatever. Take us through that.
Yeah, I think the first structure was slightly different to what exists today in Europe, and I think it gave a look through to the investors, which maybe gold wasn't, you couldn't own gold, etc. I can't remember exact reason 20, 25 years ago what caused the exact issue, but it looked straight through to investors, whereas today you own a debt security and it's backed by gold, so it's slightly different, the legalities of the look through. So we had to restructure and actually issue a whole new product. You couldn't convert investors who you didn't know into a new structure because you need to know your client, and these investors are bought by the exchange. So we had to create a new gold ETC and have them trade alongside each other.
And that was when you were at 400 million, right, in the original product, yeah? So you had to get all those investors to switch out the old one into the new one. And how successful was that? Because today you'd just think that would never happen, right?
Yeah, it's very hard to sometimes know who the investors are in an ETF or ETC because they buy an exchange and they own through custodians and nominees. So we faxed, emailed, and called all the custodians and nominees and brokers in Europe as many as we can. Email, etc., and those types of things didn't work as well efficiently as it did today, and we ended up getting about 350 million, I think, converting across to the new structure. But as I said, they had to sell one product and then buy the new product. So it was actually probably a bit of a miracle that happened.
Coming to London was not a fully thought out plan. What happened to that? How did you end up here 5 years later? What happened?
Launched the gold ETF in Australia, and as I mentioned before, working with the World Gold Council on securitizing or bringing gold to the markets in the rest of the world. With that, me and Graham Tuckle was ex-US. So we decided to do London next to give European investors access to the gold ETF or gold ETC as it's called in Europe. The project was progressing and it's getting close to the listing. So I came over to work with the lawyers and World Gold Council and get things ready for the gold ETC launch in 2003. Initially came for 2 weeks. Slept on my best mate's sofa because obviously we were a startup back then and didn't have a large budget. And here I am 22 years later British resident and living in London. And funny enough, my my girlfriend at the time, who's now my wife, she'd moved to Melbourne from Canada to be with me. And when I moved to London a few months later, she thought I was
You left her behind.
she thought I was trying to get rid of her. So that was an interesting thing at the
Yeah.
time. And then that leads me on to another coincidence. We signed or leased a website called goldbullion.com back in the day before we created the website ETF Securities. So the website was goldbullion.com. And Graham sends me a lease agreement, says, oh, some guys own the goldbullion.com, they're going to lease it to us for 3 years. Can you please have a look at this? And they're from a town called Penticton, which is about 30,000 people, 5 hours from Vancouver. And my wife lived in Penticton for 15 years and her parents still live there.
Yeah.
And about a year later, I actually met the two guys that owned goldbullion.com website at the time. I met them and took them out for dinner in Penticton at Christmas time. But it was like a small random town in British Columbia that most 99% of people in the world probably never even heard of.
And question falls out both of those then. So the best friend that you stayed the couch on, is he still your best friend now?
He's a shareholder of HANetf, so you have to ask him.
And the guys from Penticton, do you still know those guys still today?
No. I mean, I guess we licensed their website, and they were school teachers in Penticton. I don't go back there very often, unfortunately. So
maybe when you retire, you can go retrace your steps. Yeah. But tell me about there was two versions of Go Bullion Securities. One came to market and then had to be killed, and another one started. Tell me a bit around that story, and I want to hear the story about the fax machine in the bedroom as well. Tell me about that.
Taking it chronological order, fax machine in the bedroom was we had a fax machine in a very small office in Melbourne. Email didn't really exist back in those days, and most people had a phone number and a fax number. So we faxed the Gold Bullion Securities fact sheet around when we launched it to some institutional investors, and they ended up being the first investors in the gold ETF. They were gold mining funds, so they understood it and they wanted to, I guess, probably equitize their cash. So that was the fax machine story.
Was that like you doing that for a while and taking time on that, or how long did all that take?
Not for a while. I mean, it wasn't the focus of our business to use a fax machine.
Yeah.
But everyone had a fax back in those days.
Like, imagine you had to do it, but not Graham, yeah?
No, yeah, I was the one doing the faxes, but he probably would have happily done it as well if it was required. As you know, you've got to do when you start a business.
Yeah.
There's no airs and graces about who does what.
If someone doesn't put the bins out, it's because you haven't done it. Yeah.
That's right.
Yeah.
More technical and different question about the restructuring of the Gold Bullion Securities came to light after about 4 months later that there was a small issue with the structure, and for it to survive in the long term, we'd have to create another gold ETC. So in sort of March 2003, the current Gold Bullion Securities was launched, which traded alongside the original version.
Right.
And we had to try and publicize and get investors to sell one Gold Bullion security and buy the other without knowing who those investors were, and not being able to.
So no fund merger or anything like that. It was just purely trying to persuade them. You're in one, it's not as good. We found something out. You need to go into this other one, yeah.
Well, not even persuading them, because I didn't know the investors, and you can't market to people that you don't know.
Yeah.
So it was just a matter of just getting information out there and
get the information,
letting them know that if they want to continue to own gold, that they would have to sell the product that was going to terminate and purchase the product that was going to continue, and that's the Gold Bullion Securities today.
The fax machine story reminds me of one of the. It's very funny now, but one of the arguments we had with Graham Tuckwell on when we got a new office in the city, and we had a fight over the value and how good a fax machine should be that we were going to get for the new office. I think it was like 800 quid or something like that. A fax machine,
300 quid.
300 quid was it? But we that in the table, the perspex table that was going to go in the waiting room.
It did go in the waiting room of 2 London Wall buildings.
We obviously had very important things as partners of the business to talk about, whether we're arguing with the fax machine and the perspex table. Yeah,
absolutely.
Very good. We don't have those arguments anymore, do we?
Just about different similar things.
Absolutely. Did you have any, when you were going through any of this, did you remotely have any idea how the ETF market was going to develop, and your position and the different businesses that you've ended up, Boost and WisdomTree Europe and HANetf, and 700, products later, what did you think? Where did you think this was going?
Predict that. I didn't know I was going to help found 4 or 5 different ETF companies and be the first to secure create oil ETCs and commodity ETCs, gold ETCs, first white label ETF platform in Europe. You never predict it. You go to university and see some jobs that exist out there and think, well, I'm going to do one of those jobs.
Just pull you back there. I think you've had a bit more vision than you give yourself credit for. Whether it's the right timing or not, it's a different question. But I mean, if you think about when we tried to diversify ETF securities with our UCITS platform, and the first range of products we did was thematic equities. It was that was 2007, right?
Yeah.
2007, 2008. We did clean energy, water, nuclear, shipping,
Gold
coal,
mining, yeah.
gold mining. So from that perspective, those if those products had stayed around for a decade, that'd have been $100 billion platform.
Yeah.
I mean, you can't always be right with the timing, but I think there's a bit more vision in there than you're probably giving yourself credit for, really.
Yeah, I mean, a vision, but also then having the wherewithal to stick with it. And many good companies or good ideas don't last because you don't, after some tough times, you lose faith in yourself or you run out of money, etc. So we kept faith in ourselves, didn't run out of money, thankfully, etc., and hung around long enough to ride the growth. So bit of luck, bit of hard work, etc. And
staying power is a big thing for the ETF market, isn't it? Because I think if you have a good idea, if you can ride out the period, then timing obviously will come around at some point if you have a good idea, won't it? I mean, that we've seen that time and time again. That I mean, what was it? iShares Clean Energy product took 10 years to put money in that, didn't it?
INRG launched in about 07 or 08 and grew to $100 million after 12, 13 years, and then between the one in the US and Europe, ended up with $14 billion combined when clean energy became popular. I mean, the lithium equity ETF in the US, that was
Global X, that wasn't it?
About 100 million. I think it was another company before it ended up with a Global X, and that was about 150 million for 15 years, and then it grew to 5 billion in the space of 12 months. So not many ETF companies today would continue a product for 15 years at $50 million because it's barely break even, etc. And if those products have been shut down, they would have lost out on 14 billion or 5 billion of assets. So,
and you've been CEO or co-CEO, I have to say that, with a very good partner for the last four meaningful businesses, right? I mean, did you have any sort of idea you'd be a CEO of four meaningful ETF / asset management businesses?
I mean, when I started my career, I always worked for smaller firms, or even if they were larger firms, they were small offices. I worked in custody consulting at Towers Perrin in an office of 100 million, but custody consulting was like a brand new department. And Melbourne was the centre of excellence with about 5 or 10 people in it. And when I went to Macquarie Bank in Canada, Macquarie was a brand new business in Canada, and there was 4 people in the mining M&A team. So I've always worked for smaller businesses where you've had to do business development and start from nothing. I've always been attracted to that. So maybe not, didn't expect to become CEO of all these companies, but I sort of always had I always liked those types of businesses where you could build something and make an impact on the business's success.
I don't know if you feel like me, is I sort of feel a bit of a continuation of each other. I don't say, obviously they're different names and different companies, but in terms of our mantra and our culture, I think it's a continuation, really. And obviously we've replowed our investment into new businesses, but essentially I think there's a lot of commonality and a lot of momentum, behind all that.
Yeah, I mean, we've been together for 20, 22 years, whatever.
Work marriage, mate. Work marriage. No divorce yet.
Yeah, and obviously it takes something special to create a startup company, what they were when they were starting up, not startup today. And we talked about before how, interviewed lots of people and went, why would I join you guys? 2 people, a man and a dog, whatever, and I'm going to go join a bank. So requires, the right type of people to join that environment, and you want to maintain that environment to keep it innovative.
Yeah, and I think that's one of the major differences between what you and I have done in the European market versus what most other people have done in the market, where, most people who start an ETF business it's already part of a big bank or big asset manager. So they've already got, HR and marketing and legal and, corporate and premises, etc. Where you and I literally sit in Starbucks and say, let's do it, don't we? And every rivet that's gone in the boat, we've put in there. We don't have a laptop, we don't have a name, we don't have a checkbook. And all that takes work. It all takes work and effort. And, I think we've been on that journey several times now that it almost is muscle memory, isn't it?
Yes, yeah.
Not that I want to do it too many times again, though, I must admit. But what about you?
This will be the last one for sure, I think. It's hard work.
It is. It's unrelenting, isn't it? But
Yeah.
but very enjoyable as well. But what are the things you're proud of in your career then today? You know, what other things, if you were going to say, you know, this is the handful of things which I can really define myself.
Handful.
Yeah, exactly.
I'd just say, starting up what's become successful companies and successful products, hiring people that have gone on to also become successful, etc.
Yeah, that bit to me is really important, I think.
When we
Seeing them
left
succeed.
HANetf Securities, there was 80 staff there, but over the 10 years, they probably had hired 120, 130 people. Even during the crisis when people were getting fired, hiring people. Boost WisdomTree Europe, we hired 50, 60 odd people, and now again. So, we've created 300 jobs for people over the last 20 years. It's not many people have actually created and paid 300 people themselves.
Just following on, I mean, obviously creating the first gold ETC, gold bullion securities, I'd say it's pretty plain now that every meaningful ETF firm has a gold ETC and platinum, palladium, and silver, etc. So I mean, it's not just you create the structure, but you've obviously created a $100 billion plus asset class that people take for granted that they have in their portfolios. What do you think is next for the ETF industry? Like, I mean, what if you're plucking one big idea out the air, what would you say is going to be that? Will you see from here?
What we see is probably what we don't see. So securitizing something that doesn't exist today, because the things that are right in front of us are obvious. They can just copy the structure and bring those products to market if there's demand for that type of investment. Maybe liquid investments or something. They'll find a way to copy the returns in a different security that's liquid, or working out a way to securitize the liquid investments, perhaps. Because all ETFs are they're a wrapper. They make things accessible and they fractionalize investment. No one could afford to buy a gold bar. Well, not many people, 500,000, 800,000 pounds of gold bar. But you can buy a gold ETC in as little as sort of $20, $30. So probably along those lines, I'd say.
And obviously, just probably chucking something out there for you. You obviously, created HANetf ETF, to allow the barriers to entry to come down massively in the ETF industry. And we've got this scenario in the US where you got YouTubers issuing ETFs, financial media websites, governmental companies. We've got the Raw Mints, owned by the UK Treasury. We've obviously seen the democratization of the investor base through ETFs. Do you see the democratization of entering the ETF market through white labeling and what we're doing, and what sort of growth are you expecting to see in? Well, I mean, I suppose you're already seeing it with the rise of active managers, but what are you expecting to see next few years in the European market?
As we've always believed for the last 8 years since we created HAN, that every asset manager should have an ETF in their offering. So there's a lot of investment managers out there or asset managers that don't have an ETF yet. So, I mean, and they're not going to be able to launch those all on their own. Just from the service provider's perspective, from the access to people that can create those things, build the ETFs, the experience, the staff. There's no use just replicating the infrastructure hundreds of times. So we don't even need to look outside what we're doing today because we're still at the tip of the iceberg. I mean, there's so many more things that we could create in the future that might not be ETFs per se, but there's just so much to do still in the ETF market that I think we're going to be working pretty hard for a long time if we were to bring all that pent up demand still to market.
Yeah, I think exactly right. I think just people just adding the wrapper to their shelf, not even becoming an ETF firm, just offering that wrapper and distribution and sort of saying, well, we've got IP, we've got content. iShares and Vanguard are all about scale and cost. We're more about IP and brand, and I think the e-commerce friendly nature of the ETF, versus mutual funds or other class of instruments, just mean that it's going to win that battle, isn't it?
Yeah.
And people are going to want, whether it's Cayman, UCITS, OICs, structured products, they're going to want the UCITS, ETFs and ETCs on the shelf with that, aren't they?
Yeah, I mean, it's a secure and robust structure. So if it can be done in an ETF and ETC, then it's trustworthy.
And I think you've even recently done an ETF that's tickers Nate, which is your son's name, right?
That's right. And, my son's Nate, and there's a product I built a long time ago that's now a WisdomTree product, and its ticker is Nik. Well, that's NICK, not NIK. So yeah.
Well, I believe you were NICK at one point, right? Is that right?
I'm actually
I've seen your dissertation, right? So
well, my name's actually Nicholas. So my mother would tell me.
I always say the amount of passports you've got, Nick, you're Jason Bourne. So I'm sure you've got a few different ways of spelling it from that perspective. Just to finish up, you've obviously got decades of experience, not just of running ETF and ETC businesses, but also just being a businessman and entrepreneur. I mean, what for everybody watching this? I mean, what single piece of advice would you give to anybody? If they were looking to, start a business or start an ETF, ETC business, what advice would you give them? I know you're doing this all the time anyway to people when they're coming to pitch ideas, etc. But what's the sort of gem that you would give them?
Yeah, I mean, obviously, obvious ones are like work hard and be honest, etc., and treat yourself. But I think just be open to ideas. If you see your dad's a lawyer or a banker and you think I want to do that, and you end up being a lawyer or a banker, you know what you know, but you close off to things would have never thought of yourself, and might need to be presented to you, and someone else mentioning a crazy idea, etc. So you learn nothing by not listening to people. You can listen to people and then not pursue that idea, etc. So keeping an open mind, because you just never know where you're going to end up or what you're going to be.
You've been very successful in life, and a lot of that has been down to the choices you've made and the success you've had. And I do feel that being an entrepreneur does, have its rewards. But the chance of success is a lot less than if you go and get a job, like as you say, as a lawyer or an accountant, whatever it is. But if you succeed, it's very rewarding from that perspective, not just from a financial perspective, but also from a libertarian perspective as well, of being able to do your own thing and not working for the man per se, isn't it?
Yeah, no, it's enjoyable because it's something that you've created, not you working for someone else. It's something else created, etc. So, but after being, a founder for, co-CEO or whatever for 20, 25 years, probably unemployable now. So that has its ups and downs. Like the opposite side of the story has its own ups and downs.
Don't worry, I'll always give you a job, Nick. That's fine.
Thanks.
But no, look, I think that's a valid statement, because it's the ability to work for somebody. I mean, look, we all, even when we're entrepreneurs, we all still have to work for people. We have to keep customers happy and investors happy and shareholders, etc. You got different people to keep happy, but you have a bit more freedom and experience. And I think the one thing that's that I've always been very proud of is the fact that we've employed people, we've invested in businesses in the UK, we've created wealth for the country, and a lot of people do down.
Generated lots of tax, probably.
Generated lots of tax. People do down the UK as a place to do business, but I can't think of anywhere better to do it, really. And all I can say is, to you, to finish up, is we've had a couple of decades plus of time together, and I think pretty proud of you and what you've achieved. And I do think, to some extent, the world out there doesn't know you as well as I know you. And hopefully this little interview here will give people a bit more insight into the Nik I know, and what you've achieved and what you've been able to bring to the market, mate. So
thank you for just bringing forth the good parts.
Well, there's always I always find you remember the good parts but forget the bad bits. So
you learn from, right?
Exactly. But no, thanks again, and I think you should be very proud of it. Well done.
Here's the next 20 years, eh?
Sounds good. Hopefully I don't see you as much as I've seen you for the last 20 years, but there we go.